Okay, so what is a CAD hedged fund or just a hedged fund? In this case, a Canadian hedged fund. This question was brought to me by Caesar from Alberta. Caesar, thanks for this question. And Caesar's wondering what exactly is a hedged fund and what's the difference between VSP and VFV. So in this video, I'm going to dive into all of the information about what a hedge fund is. So Caesar's question in particular was asking about VFV and VSP and what is the difference between these two? Well, first of all, they're both VFV is an S&P 500 ETF, and same with VSP. They're basically the exact same thing. They're both S&P 500 ETFs. However, VSP is Canadian hedged, and they both have the same management fee at 0.08%. So this is VSP here on the Vanguard website, and this is VFV. Now, both of these funds are great funds with such low management fees at 0.08, 0.09%. That's an amazing low cost index fund to have that tracks the S&P 500. So by all means, either of these options is a fantastic choice to own in any sort of retirement account or just any sort of investment account. These are amazing low cost index funds. So let's take a couple examples. So let's take VFV. So this is the unhedged version. So if the Canadian dollar goes down, then your investment is actually becomes more valuable. And why is that? Well, that's just because VFV is in US dollars. And so when you transfer those US dollars back into Canadian, if you were to sell it, the Canadian dollar has gone down. So you technically are getting more Canadian dollars. Now, what if you have VFV and it's unhedged, obviously, and the Canadian dollar goes up? Well, then your investments become slightly less valuable because, again, same thing goes. If you were to take that VFV money that you bought, you sell it, and then you transfer it back into Canadian dollars where you probably live and are spending most of your time and money, and then you're actually going to have slightly less buying power, really, not actual value, but the buying power you'll have will be less. And so what if the US dollar goes down, but your investment goes up? And now this is if you had, let's say, a hedged fund. So if you're buying VSP. So if your ETF rises 10% and the US dollar goes down 10%, well, then with a hedged fund like VSP, your investment's going to basically remain as a net 0% gain for you. So when you were to sell that and then transfer it back into Canadian dollars, your buying power is going to be essentially the same as if you didn't really experience those gains at all. So that's a little bit of the risk involved with buying hedged funds, is that if the US dollar is going down, but if the Canadian dollar is going up, basically, but if your ETF is still rising too, then you actually are not experiencing as many gains from that going up. However, both of these are just all that a hedge fund is really doing is just minimizing your risk and is protecting your currency exchange. It's not necessarily helping you increase value or decrease value if we were to compare these two ETFs right together, because these ETFs actually hold identical holdings. So there's no real difference between them besides the fact that you're guaranteeing that Canadian US dollar exchange rate. So now if we were to look since 2013, this is the graph that shows VFV compared to VSP. So now obviously VSP, which is the hedged fund, has not experienced as many gains as VFV. And this is due to a couple reasons. Reason number one is that VSP will actually have a slightly higher management fee, or at least costs associated with this fund, because it has to do that currency hedge for you. So that actually costs a little bit of money, which means that your investments, your portfolio is just not going to have that much money to continue to reinvest. So that's a little bit of a cost that's going to be associated with your hedged fund. And also during this period of time that we see on the graph here, between 2013 and 2020, the US dollar increased in power compared to the Canadian dollar. So the Canadian dollar is going down during this time, which means that if you were to sell your investments, you're still hedged against that Canadian dollar. So you would still be getting that almost par 1-to-1 exchange rate that it was back in 2013. So that's a little bit of ways that the hedge funds can protect you, but it's also a little bit of a risk as well because you do have to pay more in fees. So, however, if you own this fund during this time, you obviously would have rather had the unhedged fund, right? You would have had that U.S. dollar increasing in value, and while the Canadian dollar decreased. That way, you would have even more money when you were to eventually sell those funds. So if we but so that kind of really gets us into like a dangerous zone of like trying to play the game, right? And try to play the game of, oh, I should buy hedged funds now because the Canadian dollar is going to go up, or maybe you should buy unhedged now because the Canadian dollar is probably going to go down over the next 10, 20 years. So it's really playing this guessing game now of, okay, which fund do we want? And it really depends on where we perceive the value of the Canadian dollar going. If we perceive the value of the Canadian dollar diminishing, well, we may as well hold VFV, the unhedged version of it. We're just going to get more money or more buying power from that investment. Now, if we think the Canadian dollar is going to rise back up and become closer to par with the US dollar, well, then we would want to look at a hedged version because we would actually be able to make even more money having the hedged version if the Canadian dollar went back up. Now, that's a big if. So looking at this chart here, in 2002, the Canadian dollar was roughly 0.6 cent or 60 cents compared to the American dollar. During 2007 to 2013, the Canadian dollar, US dollar were roughly on par, give or take. And then during 2020, so right now, catching up a little bit, the Canadian dollar's dived back down and is back down at those 2002 rates again at 0.6. So ultimately, this brings us to a couple questions, right? Like I've given you guys a lot of information so far, but for the most part, it's like, well, all right, where do we really see the value in having this hedged fund? Or maybe we should have an unhedged fund. So it comes down to a few different things, right? One is that one of my personal finance principles is that I invest for the long term and I only worry about variables that I can control personally. I'm not in the business of predicting whether the Canadian dollar or US dollar is going to go up or down. And quite frankly, I don't really care. And so for myself personally, I just buy VFV, the unhedged version of it. And I do that for a couple reasons. One, I don't care where the US dollar or Canadian dollar goes up and down. And so I just would rather play the long game and just experience slightly less fees in my fund. And if worst case scenario happens and maybe the Canadian dollar just shoots up dramatically and becomes a lot more powerful compared to the US dollar, which I think is pretty unlikely. But if that does happen, well, I could still use my US dollars and maybe go to a different country. And if I need to buy something or even buy things in the US. So even buying things in the US, you would have more buying power there still. So it's not necessarily a bad thing to have a fund like VFV that is unhedged. Unhedged funds are also less volatile too. So that's a really big benefit of having unhedged funds. The Canadian pension plan, they actually do not buy hedged currency funds. And that's just because of these reasons that I'm talking about here. And also, hedging isn't exactly as precise as people think it is. So it's not exactly like you don't guarantee yourself that on par value exchange between the Canadian dollar and the US dollar. It's not that exact of a science. And the other thing that reason why I just stay unhedged completely is just because it's very tempting to look at the hedged and want to try to switch back and forth and try to essentially what we're doing is timing the market. But in this case, we're timing currencies, right? And we're timing where the currencies are going to go. And I'm not in the business of trying to time the market, and I'm not in the business of trying to time currencies or predict whether currencies are going to go up or down. And one of the three factors, so Vanguard actually came up with some research that found there are three main factors that affect the return on your portfolio. One of those factors is how often you buy and sell. So if you're buying and selling a lot, your returns are ultimately going to decrease significantly. And that makes sense too, because There's other studies that have found if you are not in the market for the 10 best days, then your returns drop, I think, like 50%, something like that. And then the other factor that they found was, what am I saying here? Oh, low management fees, right. Yes, so unhedged is very slightly lower management fees, but still just not buying and selling a lot and making sure you're having a low cost index fund. However, if you want to get the hedged version, either of these two stocks, VFV or VSP, is a great option. I wouldn't shame anyone for buying either of them, or you know what? You can always buy both of them too. So that's my opinion on it. I personally am just going to stay unhedged. I'm not trying to time the market. I'm investing for the long term. And ultimately, while there is a potential to, yes, win big with some changing back and forth between hedged and unhedged funds, I'm not in the business of trying to predict when that's going to happen and try to maximize off of that. I prefer a very simple strategy that is just basically a buy and hold for the long term. Things like that is kind of what Warren Buffett has recommended doing, which is buying and holding value stocks and the S&P 500 index funds, and just buying and holding it for the long term. So that's what I'm going to do. Is I'm going to stay buying and holding VFV for the long term. By all means, like I said, you can buy either of them. And if you guys have any more questions, please let me know in the comments of this video. I'd be happy to answer them in my next video. Caesar, I hope this shed a little bit of light on these two different funds and how they differ. And I hope that was helpful for you. And please don't forget to hit the like button and subscribe to my YouTube channel. That'd be very appreciated. And you'll help join the community. Well, you won't help. You'll join the community of my subscribers that are all trying to become financially independent. So go ahead, subscribe, and learn more about personal finances. I'll see you guys in the next video. Peace out.